Good morning, and thank you for joining us. I'm Terry Kimball with the Chandler Chamber, and I want to do a shout out to my fellow chamber colleagues, the Ahwatukee Foothills, Apache Junction, Carefree Cave Creek, Fountain Hills, Gilbert, Queen Creek, and Tempe Chambers of Commerce, as well as the Chandler Chamber of Commerce. The chambers are really committed to helping you as small businesses, making sure you are getting the tools and things that you need during this during these times. So it is my pleasure to introduce, we have two great experts for you today. We have Stephen Vogt with Stephen Vogt CPA, and he's going to talk a little bit about some of the changes in the tax filing dates and so forth, and all kinds of information that we need to know to making sure that we are keeping our books and that in line. We also have joining us today Marcus Browne with the SBDC, and he is going to share some changes from PPP and the EIDL and all kinds of things that are changing in that world and reporting wise as well. And they are both available for questions. So in your chat bar, please make sure that you're submitting questions. We will get those to those at the end, but let's go ahead and open it up, and we're going to kick it off with Stephen. So thank you so much for joining us.
All right, good morning, everyone. I'm going to start by always doing a sound check. If you can hear me, raise your thumb, anybody. I just want to make sure. I don't want to go through a 20-minute presentation, find out no one ever heard me. You can hear me? All right, good. All right, my name is Steve Vogt, and what we're going to talk about, I'm going to talk about recording of COVID-19 relief loans as it relates to accounting purposes, your bookkeeping, financial statements, and also talk about tax relief. There are some tax breaks related to COVID-19 that you should definitely be aware of and you'll want to take advantage of. Next slide. It's always nice to know a little bit about the person who is speaking to you. I grew up in Michigan. I'm a Michigander, graduated from ASU with a BS in accounting. I'm a CPA as well as an enrolled agent, member of Arizona Society of CPA and AICPA. Own my business, CPA firm with my beautiful wife. We've been in business since 1995. We have two offices. We have one in Chandler, near the Chandler Airport, and one in Queen Creek. We're serving about 2,500 clients. We offer a wide range of services, tax preparation, everything from individual and business returns, S-corp partnership, also accounting services, payroll processing, and entity setup. I have 4 children and 5 grandkids. I know I don't look that old, but I am. And I'm an inspiring drummer. I say inspiring because I don't have that musical gene in me that some people do. And I really have a lot of respect for if any of you play a musical instrument. I really admire you. It's been a challenge for me. I still enjoy it, even though I'm not proficient at it, but I try every day. I actually have a couple drum sets at my office. I get here at 2 or 3 in the morning. That's one of the reasons I do it, is so I can practice. Next slide. So what we're going to talk about highlights is the PPP program, Paycheck Protection Program, and also how you might qualify. Now, I know we're talking about recording for accounting purposes, but I just want to spend on a couple slides, maybe 2 or 3 minutes, to remind everyone what the program's about. It'll help you understand better the recording for bookkeeping or accounting purposes, and also how to account for the PPP loan money, and then again, the tax credits that are available. The next slide, giving you an overview. There are 2 different types of monies that are available. We're going to spend the time talking about the Paycheck Protection Program, but I do want to mention the Economic Injury Disaster Loans, EIDL is what it's referred to. And first, that one, you can borrow up to $2 million. Now, a lot of people are thinking, hey, has the money run out? Has it run out? There have been 2 goes at it as far as funding, but it looks like Congress is probably going to have a 3rd funding. So if you have not applied for either one of these, PPP or EIDL, just know that it's probably not too late. If you were to submit an application now, you might still qualify for the 2nd round, which still has some money available. But even if you don't, you'll be in the queue for the third go round, which may have money there going into the end of the year. So going back to the EIDL loan, you can borrow up to $2 million. It's not forgivable. It's for 6 months of operational expenses. The main purpose is for payroll, to cover payroll expenses, but it does not have to be used for payroll. You can get up to $10,000 advance. It's considered a grant. That $10,000 up to $10,000 is not repayable, and it is taxable. On the other hand, the Paycheck Protection Program, that's the most popular one you hear a lot about in the news. That one, businesses can borrow up to $10 million and it can be forgivable. It's not necessarily forgivable. You have to qualify, and that is a separate application process. The loan can be forgiven if 75% or more of the money borrowed is used for payroll expenses. And we're going to talk about in a moment why that is so important, that you have a good accounting system and account for the loan money. In the end, if you want to have the PPP money forgiven, the loan forgiven, you're going to have to show that 75% of the money you borrowed was used for payroll expenses. Initially, what you're going to do is you're going to report that money that you borrow, the PPP loan, as a liability on your books. Now, yes, it may be forgiven, but we don't know that until the end. And until that loan is forgiven, it is a liability. Once it's forgiven, it will be removed from the books once SBA approves the forgiveness. If they don't, the last bullet point says there, if they don't forgive it, if they don't forgive the loan, the portion that's not forgiven will be reported as a 2-year loan, long-term debt. All right, the next slide. Now, and I know some of you are going to have some specific questions. I'm not going to go over in detail a lot of debits and credits. We will hit some of that. But I am willing to meet with any of you, no charge. If you have specific questions, you need some advice on specific details, we can do that one-on-one in the future. What is PPP, Paycheck Protection Program? It's an incentive for small businesses to keep their workers on payroll. That was the purpose and is the purpose of the program. Employers don't have to require the employers to work, and this is what's interesting. They don't have to work. However, if you have worked for them, then that is something you can have them do, and it doesn't have to be the same work that they were doing before. The whole purpose is to keep employees employed during this time period. SBA will forgive the loans if, and these are the requirements. It's not difficult. It's not real difficult. Yes, you got to jump through some hoops, but it's not real difficult to get this loan, the PPP loan. But there are some specific requirements in order to get the loan forgiven. Number one, all employees have to be kept on payroll for 8 weeks. Once you receive the loan money, you've got to keep the employees on payroll for 8 weeks. You have to show at the end of the 8 weeks, 75% of the money was used for payroll expenses. You can use 25% of the money for rent, mortgage interest, not principal, but mortgage interest, and utilities. And again, the PPP loan money not forgiven would be a debt on the books, and you pay 1% interest over 2 years. So whatever's not forgiven, again, it's a low interest loan, so it's still a good thing for businesses, even if the loan is not forgiven. 1% loan over 2 years, that's not bad. And the payments are deferred for 6 months. Next slide. How do you qualify? Again, it's not difficult. You've got to prove at the end 75% was used for payroll. Now, I want to point out what's in bold there. Yes, it is rather simple to get the loan, but the one thing you got to be real careful about, and I'm not an attorney, but you got to remember this, and that is, as part of the application process, you've got to certify in good faith. You're going to sign that application, and you're going to certify in good faith that current economic uncertainty makes a loan request necessary to support ongoing operations. So if your income during this time period has been going up, you haven't had to lay off employees, You've got plenty of cash in the bank. You've got options to borrow money. You might not want to apply for a PPP loan. It's really for those who they've had to shut down. Their income has dropped drastically. So really give that some thought before you just automatically look at this as free money that's available. That said, that last bullet point, SBA and the US Treasury have not given any guidance as to what they mean by the loan being necessary. They haven't given guidance on that. Next slide. How do you qualify? Qualifying to get the loan, not difficult. Talked about that. I'm going to skip down to the bottom. Who qualifies? Virtually just about every business can qualify. An S Corp, C Corp. If you started your business and you haven't made any election as far as the form of entity, you're a sole proprietor by default, you qualify. If you on your personal tax return do a Schedule C, you qualify. If you're an independent contractor, virtually just about any entity, anyone doing business most likely qualifies. Go to the next slide, please. All right, now we're going to get into the main purpose of what I was asked to speak about, and that is how to account for the PPP loan money. And it's important to track the expenses. Now, when you get that loan, you've got to, at the end of 8 weeks, if you want to have the loan forgiven, at the end of the 8 weeks, you're going to have to prove some things. So that's why it's important to track how that money is spent over the 8 weeks. So that's why it's important to do that, to support the request, what you did with the money. Expenses paid with the loan money forgiven is not deductible. So again, if you, let's say you request that the loan money that you borrowed be forgiven and it's not forgiven, you can deduct the expenses. But if it is accepted and your PPP loan is forgiven, those expenses are not deductible. And we're going to talk more about that in a moment because that could change. And I have a feeling that's going to change. Here's what you want to do. When you get that loan money, as soon as you get it, what I suggest is have a separate bank account. You'll want a separate bank account to receive that money. That way, you know that all the money going in and out is related to the PPP money. That said, if for some reason you don't have a separate bank account or you don't want to do that, at least create a separate bank account on the books to capture, as it says right here, separate bank account on the books to capture the PPP loan money. So that way you can track it. Then what you want to do, the expenses you normally pay, whether you had the PPP money or not, pay those expenses just like you normally would out of your business checking account. Then have the PPP business checking account reimburse the regular business checking account. And include detailed descriptions in the memo fields. And again, the reason you're doing this is at the end of the 8 weeks, you're hoping to have all of the money you borrowed, PPP loan, forgiven. And this is why that's important right there. Next slide. For those of you who might be accountants, you're familiar with generally accepted accounting principles. There are no generally accepted accounting principles that give guidance on how to handle this situation. But what is being done is, first of all, when you receive those proceeds from the PPP loan, it is a debt on the balance sheet because it has not been forgiven. And although interest and principal payments are deferred for the first 6 months, you should accrue the interest expense. So you should set up a separate interest expense on your books, call it interest expense, PPP, accrued interest, PPP. And again, I don't want to go too deep into the debits and credits. If any of you want to have more details, I'm willing to discuss that with you at another time, no charge. Last bullet point there, while the PPP loan might be forgiven, the costs of the expenses would be shown as an expense on the income statement in separate accounts You don't reduce the debt until the debt is forgiven. All right, let's go to the next slide. All right, let's talk about some tax credits that are available. And I have a feeling there's going to be at least one of these that most of you attending this webinar would want to take advantage of. These are not the type of tax credits that are obscure that, you know, only 2% of the people out there would qualify for. Most people, most businesses have been affected by COVID-19 and therefore should probably take advantage of at least one of what I'm going to mention here. The first one is the employee retention credit. Employers who were subject to the closure due to COVID-19, coronavirus, if your business closed for 2 months, maybe part-time, couple weeks, you might qualify, fully or partially suspended due to the virus. Quarterly revenues, if they shrank by more than 50% versus the previous year, as an example. This employee retention credit is based on wages. So here's an example. Let's say you've got 10 employees and on average they're paid $2,000 a month. So that's $20,000 you paid out. And they get healthcare benefits, $500 a month each one, that's $5,000. So your total monthly cost is $25,000. And you did that for 4 months, that's $100,000. You might qualify for a $50,000 tax credit. That's a refundable credit. That's a credit, that's $50,000 in your pocket right there. And again, that's if quarterly revenues shrink by, let's say, 50% the previous year. All right, let's go to the next one. This is a big one. If you have several employees, you are used to paying employer payroll taxes, quarterly payroll taxes. You file your quarterly payroll taxes. You can put off paying those taxes. What you can do is the Social Security tax that you normally submit quarterly, you can pay those over 2 years. Pay half of them in December 2021 and half in December 2022. So that can give you a better cash flow. But now you've got to be real careful, because if you do that, you've got to make sure you're going to have the ability when those taxes are due, December 21, December 22, to pay those taxes. You don't want to put yourself in a situation where you get into financial trouble because the money's not available at that time. Medicare tax and federal income tax not available. Back up one slide, or no, go to the next one. Net operating loss, that one right there. This is one I think a lot of people are going to be affected by in a positive way. Modifications for net operating loss. Before this past year, you could carry back a net operating loss, and I'll explain what that is in a moment, back 2 years. And even this past year, 2019, you were limited. But because of what's happened with the virus, it's been changed drastically in your favor. For example, first bullet point there, a business owner may carry back a net operating loss from 2018, 19, or 20 to the previous 5 years. What is a net operating loss? If your business, let's say, had a loss this year, and on the tax return, after offsetting against other income, you have, let's say, a negative taxable income. Let's keep it simple. You have a net operating loss. In previous years, you could carry that back or carry it forward. But beginning in 2019, you were limited. You couldn't do much with it. But now what the IRS is saying is, you know what you can do? You can carry that back to the previous 5 years. So whereas if you filed your 2019 tax return, let's say in February, you probably did not take advantage of what we're talking about right here, or on your 2018 tax return. So what this is saying, if you look at the example, the COVID-19 crisis creates a net operating loss, let's say in your business, let's say for 2020, and as a result, you lose $100,000. The new rules allow you to take this $100,000 net operating loss and treat it as a deduction on your amended 2016 tax return. So you could, or, in this example, it's 2020, it could actually be 2019. You could go back. So on your 2016 tax return, if in that year, the original tax return, you had a profit of $300,000, you could redo that tax return, amend it. And in essence, what you're doing is, because of that $100,000 loss in 2020, you're now able to claim that on your 2016 amended tax return, which means instead of showing the $300,000 taxable income you had originally, you're now showing $200,000. That tax deduction could create, hypothetically, a $25,000 refund for you. That's $25,000 in your pocket. I think this right here, this tax credit, I think a lot of people are going to take advantage of, and they should. However, if you go back up to the top, second bullet point, beware, these refunds could take months to receive. This is something the IRS, they typically take several months to process this one. So keep that in mind. Okay, go to the next slide, please. Other noteworthy items. The PPP loans forgiven are not taxable. So that's a good thing. So because of that, the IRS, or a question people come up with is, all right, well, if it's, can you deduct expenses paid for using the forgiven money? The IRS came out with a notice and said, no, since that money was given to you and it's not taxable, you can't also deduct the expenses you paid with that money, which on the surface, it would make sense because you can't get a double tax benefit, which would normally be the case. It would normally make sense, but Congress has overridden the IRS in the past, and I have a feeling they're going to do so here. Many members of Congress disagree with the IRS. AICPA does also. Practitioners do. And here's why, is because the whole purpose of making the PPP loans forgivable, not taxable, is to help out businesses. So what Congress didn't want to do is, on one hand, help businesses out by making the loans forgivable, not taxable, and then at the same time say, by the way, you can't deduct the expenses you normally could. That doesn't make sense. That doesn't make sense. Now, I don't want to say the IRS isn't making sense or usually doesn't make sense, but I think right here they clearly are not making sense. So I think what's going to happen, if you look at the bottom there, I think I have a feeling it's going to be reversed by legislative action, further IRS guidance, or a court ruling before it's over with. Next slide. And we are almost done here, and I'll let Marcus take over in a moment. Suggestion I have for you, again, it's important to track for accounting purposes the PPP money that you get, that loan, especially if you're looking to have the loan forgiven. And to do that, you need a good payroll system. ADP, Paychecks, something, an outside service, some service that's gonna track the payroll good for you. 75% of the PPP loan must be payroll costs. So you wanna make sure you're tracking that. Use a good accounting software or a CPA or qualified bookkeeper to make sure you're separating the PPP money, the expenses. As I said earlier, remember the chart of accounts, make sure your expenses, you're tracking them with designation of PPP. Use a separate bank account ideally. And the last thing I'll say here, and I was telling someone earlier, these rules that I just went over, they're changing daily. In fact, last night, the House came up with something 11 o'clock last night. Things are changing. In fact, if you look at this, the House is set to pass legislation today to extend the period that businesses must use PPP funds to have their loans forgiven to 24 weeks by December 31. Currently, the period is 8 weeks. So that's a good thing. The bill also allows businesses to repay loans within 5 years as opposed to 2 years. So things are changing daily. Fortunately, they're changing for the better, for your benefit, not to your disadvantage. And also they're looking at repealing the regulation that requires 75% of proceeds that you borrow with a PPP loan to be used for payroll costs. Remember, if you want the PPP loan to be forgiven, 75% needs to be used for payroll. There's regulation submitted. They're trying to get that reduced maybe to 50%. Senate's also considering legislation to extend the application deadline for PPP to the end of 2020 and allow 16 weeks to use the PPP funds, up from 8 weeks. So that's also good news. So bottom line here is if you haven't submitted an application for PPP money, you think you might qualify and you could use the money, you need the money to help your business because you're having some financial challenges, it could be a good option for you. Next slide. And that is my contact information. And as I said, if any of you have specific questions, I mean, I could answer some now, but I know Marcus is coming up. Also, I'm willing to talk with any of you, whether it's on the phone or in person, no charge, and give you some personal attention and personal advice. And I appreciate the time today. And Terry, thank you very much.
Great. And Stephen, we're going to keep you on because I know that we have some questions coming up, and it also goes into Marcus. And then also, I also want you to come back and touch. Actually, we'll do this now before we switch over to Marcus. So with the new filing, so people don't have to file their federal tax forms until that July 15.
The new deadline is July 15. Normally it was April 15. You did not have to file an extension. It's July 15. Also, your first quarterly estimated tax payment is July 15 for federal. Normally it's April 15. Yes. Now, if you can't meet the July 15 deadline, you do need to file a request for extension to give you until October 15.
Okay. And so can you briefly touch on what some of the things that people should be aware of with that? Because we were on with some SBDC experts last week. We've been on them weekly. And one of the things that we're hearing is don't wait to file. Get them filed as soon as you can.
Now, what's the reason they were saying that? I mean, there's some obvious reasons. If you wait and then you miss a deadline, let me say this. The normal deadline is April 15. It was extended to July 15, including if you owe, you don't have to pay penalties and interest. They don't accrue until beginning July 15. But if you miss the July 15 deadline, you're going to start paying penalties and interest. So you don't want to miss that deadline. But what was the reason they were giving?
Just be able, because some of the changes that are coming forward on making sure that you have your 18 and 19 taxes in for reporting purposes and so forth. Maybe Marcus can touch on that too. But yeah. So at this time, I am going to turn it over to Marcus Browne with the SBDC. Thank you so much. You guys are a tremendous, tremendous partners. So I know that Stephen talked about this, and I know sometimes that it seems like we're asking these questions over and over and over again, but it's so complicated for the average person to help navigate this. And I'm really glad that we have you as a partner to be able to help our businesses do that.
Well, I agree. I mean, it's a very important, even if you hear this multiple times, it's helpful to know that multiple people are confirming what you're confirming. I mean, Stephen, I'm glad you even brought up the point that they updated. I thought I heard something about it, but I didn't have my opportunity to check it with our usual partners this morning. So I'm like, okay, now I have someone to kind of confirm it and look into it from there. So I'm just glad that I can add additional information. And to everyone out in the audience, my name is Marcus Browne. I am a business analyst with the Maricopa Small Business Development. We are partners with Chandler Chamber of Commerce, and we reside not just in the East Valley, but throughout the entire Maricopa County to serve small business owners, not just those who are affected with COVID-19, but those who are looking to grow, expand their business. And I'm aware that based off what we heard from Stephen, that there's gonna be a lot more questions. So I'll just give you the briefing of what was going on with some disaster loans and forgiveness applications, and hopefully we can attack more as we go along. Now, just so you know, as of May the 15th, the U.S. Department of Treasury released guidance on how to formally apply for PPP loan forgiveness. And as for all borrowers, they are expected to comply with this by providing all the necessary documents and completing the forms to the lender that provided the PPP loan. Now, regarding this slide, you're able to find the application for forgiveness both off the U.S. Department of Treasury and off the U.S. Small Business Development site. And from there, you can screenshot this slide. It's showing you the addresses, and I'll walk you through the process later on. But you have the opportunity to fill out a PDF version. If you're a little confused about if it's the right application, I strongly suggest speaking to the lender that offered you the loan in the first place and asking if they have a form for you provided. But these are free and accessible, easy to access forms that you can take care of and fill out and submit back to the lender that sent it to you. This is just a screenshot of how you can access it through the Treasury form. Essentially, to get here, you click on the top hyperlink. You want to go down and scroll to the borrower section, highlighted in bold. And you want to click on the loan forgiveness application, and that will allow you the opportunity to download it and complete it from there in a fillable PDF form. And this is the viewpoint from the SBA site, where you have kind of a similar trip. You go and scroll down to the borrower section titled Loans in Detail Forgiveness section, and you want to click on a hyperlink that says, click here to download the Paycheck Protection Forgiveness Instructions and Application. Then you'll have options to download as a PDF, and you can fill it out from there. As I said before, you definitely have the opportunity to ask your lenders, but this is the free and easy accessible way to take care of it. Now, there are 4 sections that you should pay attention to when you're filling out this form. I'll brief you on all of them. Stephen probably will have may have more information. We could probably tackle a little bit more, but you want to make sure you're aware that it's an 11-page document, and it's divided into 4 particular sections. The loan forgiveness section is on page 2 and 3 and deals with you rely on the information that not only you receive from the PPP, but if you received an EIDL or an EIDL advance, you want to rely on those informations to complete the form thoroughly. They're going to ask you information such as application number, the amount you receive, the amount that you have been supported in terms of employees. The next section will be on the PPP Schedule A on pages 5 to 8. It provides you a table instructions for items dealing with cash compensation, how to calculate your average full-time employee, salary and hourly wage reduction, and also full-time reduction expectations. The next section on page 9 is the PPP Schedule A worksheet. It's for you to write out the names of the different employees who've been supported through this. Keep in mind that you as an owner should also have your name on this too. In this case, even if you're an independent contractor, you do count as an employee for your business. So you want to make sure you have items such as your employee name, ID, the amount you're compensated for, and that information provided in that section. And finally, you want to make sure that the documents that you are ready and available, as Stephen mentioned, and I tell this to clients regularly, you should be documenting every expense you make from these loans. And the reason is that when it comes down to it, they're going to ask you to report back on that, especially with the 75% and the 25%. The main documents that they're going to ask you to fill out are the 3 items I mentioned beforehand, the PPP Schedule A, the loan forgiveness calculation, the PPP Schedule A worksheet. But you also want to make sure that you have documentation verifying the payroll that you ran for those weeks that you were running it from the point of disbursement to the point where the money no longer existed. So any receipts, any bank statements, any formal payroll report or tax should be included in this case. Other documentation should be regarding the non-payroll expenses, and that includes your mortgage interest payments. So any loan amortization schedules for your business, rent, any rent schedules or lease schedules or receipts of payment to your landlord. And in the case of anything regarding utilities, you should have invoices for different types of utilities you're paying off. I spoke to a client this morning and they have a telephone through Cox Business or communication from Cox Business. They have the usual utility services for SRP. You can use them and use the receipts through paying their services off to verify that you have applied this properly. keep in mind that regardless of all the changes going on with the PPP, the amounts for forgiveness is still the same. You still are responsible for making sure that 75% of it is paid to the payroll, with 25% of it having the opportunity to be paid to non-payroll related expenses, but only rent, mortgage interest, and utilities for the business are being able to count in this case. And as you do a long time, whether it's just with PPP, the IDO or IDO advance, make sure to collect all this information and keep it on tally, because we're not quite sure if there will be any further conversation after this point, but in case they do ask, making sure that you have that information available will be very helpful in this case. And this is just some services about me. I regularly work with clients, even clients not dealing with COVID-19, on the variety of service down the middle, from anything from finding assistance, business planning, and next steps. Our assistance right now is focused on getting a lot of our clients and businesses throughout the area geared to a lender that's offered them a PPP. And what we've recently been able to do has been helping our clients deal with the current forgiveness application. I actually spoke to someone at the SBA office recently who said, you know what, it's a confusing form. I have to admit it. I quite don't understand everything about it, but together the goal is making sure that you're completing this properly, submitting it to a lender you took the loan from, and that you're getting full forgiveness before the deadline is hit. We also provide ongoing trainings that we add to our own office. My colleague, Paula Whittakin, who normally is with you guys every week, she's actually leading a training right now on small business payroll, which is very essential at the moment. So those sessions, majority of them are no fee costs. And for all clients that are looking for market research to grow or essentially build their business, we help them out with that. But one of the things I keep telling people is that we're no fee. We're not here to charge you. We're here to make sure that you get the best assistance needed to support your business at this time, or if it's in case of normally with COVID-19, prevent you from closing, help you retain some employees, and making sure you're repurposing and reopening in the safest way possible.
Great. Well, thank you, Marcus.
No problem.
Wait, can you go back to that slide there, the one right there? So if you are interested in these no-fee small business counseling services, I think that this is really important because you touch all of our chamber areas. You are doing all of these services virtually, which is really, really critical at this time. So, and there's lots and lots of questions just that as things keep changing, that I know that your team is very accessible in helping to get those answers from. So we are open it up to questions. So let's go ahead and we will take our first question. And this one is that I was told that there was a $150,000 cap for idle loans. Who would like to take that?
So as far as I've been told, that's actually a thing that seems like it existed, though there's not a lot of formal verification for it. Early May of this month, any new applications for idle has been capped at $150,000. But keep in mind, any new applications for the idle itself is only restricted to the agricultural-based businesses. While I'm not sure when they're going to open up the portal again, there isn't a clear clarification if any people who apply for the idle in April or March will be restricted to the same notes. The best thing I can suggest is once they open up the portal again, is going to the SBA.gov website, seeing what they're saying the maximum amount of number is, and then moving on from there. If you do currently have an application and the idle application number, you can try to ask the people at customer service. I'm not sure they're going to know that information because that's not been formally cleared. I think it's been announced, but it's not been formally announced off the webpage. But yeah, I've heard the same thing, but I'm not quite sure how that's going to play out with the older applications. But I think it will be affecting more of the new applications when the portal is opened up to everybody.
Well, and I think part of that is just as with the PPP, that which each new round of funding, and as things come up, things are changing. So great question. We'll hopefully get that answer for you. I'm coming to the end of my 8 weeks on the PPP loan. My business continues to struggle and I will not be able to pay employees after the 8 weeks. Will we be allowed a second loan, ? Or any other relief?
That's a good question.
So based on what I know, there's nothing preventing any business from going after multiple forms of financing, whether it's through the SBA debt relief with an SBA lender, or even local funding through their municipality offices, or even a grant. So there is nothing preventing that from happening. I don't know if that means that the SBA will change things up with the PPP to allow for an additional round of it, but there's nothing preventing any businesses from applying for debt relief with the same lender they apply for the first one, or 7A lender that approved the first one.
Yeah, I haven't seen anything that would say that you cannot apply for a second loan. That's a good question. I have not seen anything that says you cannot.
Okay. And then I just received approval for an EIDL loan. How long do I have to accept?
I don't know the answer to that question.
I'm trying to make sure I understand the question properly. You just received approval for the EIDL loan. How long do you have to accept? Because with the EIDL loan, most of my clients have been telling me that it's been direct deposited into their account. If they contact you through an email or through telephone or one of those forms of communications, I think it's important to try to contact them back as soon as possible about if you're interested in accepting or not. Otherwise, they might directly deposit it into your account. So it's important that you make the decision quickly. And if you're not interested, making sure that you let them know that you're not interested before you have the money in your possession.
And one of the things that we are also hearing is people were confused because even though the EIDL and the PPP are both through the SBA, what's happening, the PPP, you have to go through that financial lender because you have loan docs. That's technically a loan. Where the EIDL is online, it's on that portal. And what we were hearing is people were confused. They weren't sure if they were approved for the EIDL or the PPP because this money just appeared into their account like a fairy godmother. So I think that that's one of the components there. Are home-based businesses able to use PPP funds for utilities?
What was the question? Can they use 150,000 PPP funds?
Now, are home-based businesses able to use PPP funds for utilities?
Okay, and if that home-based business is a Schedule C, I would say yes, because Schedule C businesses can do that. Most home-based businesses that I've experienced are Schedule C, and Schedule C sole proprietors, yes.
Okay. I thought the 25% had to be used for business expenses. Sounds like I can use 90% for payroll and 10% for business expenses. Is that correct?
Are we speaking about the PPP or the EIDL? Because the PPP, 75% of it has to be applied to payroll. And then the other 25% of the non-payroll expenses is restricted only to the loan, the business rent, the business mortgage interest payments, or the utilities. In regards to the EIDL, what the way they were regularly working, the original format of the EIDL was it was supposed to be used for fixed expenses and kind of a working capital loan. But if we're talking about the PPP, it's 75-25.
But I want to clarify, that 75-25 is only if you're looking to have it forgiven. If you're not looking for it to be forgiven, you don't have to abide by the 75-25. If you don't abide by the 75-25, it just converts to a loan. Great
point. Great point. Okay, this next question is, oh, and boy, the person who put this, if you could, is it the loan, not the grant? $150,000 loan, which I think goes back up to the idle loan. How long do I have to accept? It is the loan, not the grant, $150,000 loan.
Well, the idle advance only funds businesses up to $10,000, and that's for $1,000 per each employee. So most likely this will probably be regarding the loan part of idle, if I'm understanding this correctly.
That is what they said, I think, because I read their message.
Okay. All right. Can home-based businesses use PPP to pay home mortgage interest?
Sounds like a CPA question.
I'm going to answer that yes, because again, a Schedule C sole proprietor qualifies for the PPP money, and it does include mortgage interest. So it will be, the answer is yes, but it will only be the portion of the mortgage interest that you write off as business use of home, and not the entire mortgage interest.
All right.
A small amount.
That's okay. Every little bit helps. So, okay. Additional questions. So we do have some lenders that are still, there is money on the PPP that we have, and I have some local ones right here in our community that also extend out into some of my colleagues' neighboring communities as well. So contact your local chamber if you have not received that money or need some help in navigating that. They can absolutely direct you to those right parties. So making sure that you're utilizing those services with your chamber. All right, I want to thank today's panelists and you guys. I know we hit some pretty heavy stuff, no offense, but this keeps getting more and more complicated. So I really appreciate each of you kind of watering it down and so that the average person can know. The other thing is next week, don't forget to join us 10 o'clock Thursday morning. We actually have Jessica Post with Fenimore Craig, who is an attorney, who will provide key information on understanding the guidance and regulations for operating in the whole compliance issue with the CDC, the state, and local guidelines. Also considerations for reopening, and as you're also bringing your employees back, because we're hearing some very mixed stories on that. So we're going to be able to ask that attorney and ask those questions directly to them. So again, thank you again for joining us. And I want to do a shout out to my chamber colleagues: Ahwatukee Foothills Chamber, Apache Junction, Carefree Cave Creek, Chandler, Fountain Hills, Gilbert, Queen Creek, and the Tempe chambers. Keep your chamber strong, making sure you're utilizing the programs and services that they offer. We're really here to help you as a business owner. So thank you again for joining us.
Thank you.
Thank you.